Hello, and welcome to Passive Aggressive Money. Quick disclaimer, this is not financial advice. This is for educational purposes only. And so, starting off, I have a number of friends who have asked me questions about options, how they work, and I figured that it might be useful to try to create some video content going over my thought process, my strategies. There's not a lot of options traders would agree with everything that I do. But I thought I'd sort of release my thought process and maybe people can take away little nuggets of value from that. So, initially this was supposed to be a strategy guide for how I would play out the Coinbase IPO if I had options available for that. But this doesn't apply only to Coinbase if I were to trade options on it. So I'm going to go and sort of define the criteria that I'm choosing to fit the description of what I believe are the variables when it comes to Coinbase, and that being the driving reason why I'm setting things up in the way that I am. And so the other thing to kind of consider is that if you do the strategy for all of your options, you'll probably lose money, because the reason why I'm doing this is based on a few factors. And that is, one, I like the fact that it's highly volatile. That means that it's likely to make dramatic moves towards the down and the upside. And while if you look at it in the context of just simply holding a stock or holding a fund, if it's moving up, down, sideways like crazy, of course, that's not optimal and kind of scary to hold. But if that's the nature of how it behaves, it actually provides some advantages for trading options against it. Because as much as it's true that options are risky, especially if you don't know what you're doing, don't ever put money into stuff you don't understand. But they can also be used as a tool to sort of hedge and pad to make sure that things don't go too crazy. So that's one factor, which is highly volatile, but also we don't have a strong thesis about whether or not it's going to go up or down. The reason for this is because a lot of people agree that its current valuation is overpriced. But those same people would agree that it's very likely to also shoot up very high. So this is a very risky stock to just simply own. Okay? So, given this, it's very unlikely to stay in place. It'd be very odd if Coinbase entered the public markets and just kind of chilled and didn't do anything for a few months. That'd be very odd. I don't think anyone would expect it. So I would say that would be a very unlikely scenario. So if we can create a situation where a lot of the negatives would happen in the least likely event, and if anything else happens outside of that, we gain to profit, that's why I'm going to apply the strategy that I'm going to apply here. And also, and something that I'll also go over, because I like to buy options far out into the future. We don't know if it's going to be a good price to buy at, the option that is. Whether it's a call or a put, we don't know if they're overpriced or underpriced, because we don't have a historic volatility to think back and say, hey, is this volatility likely going to go up or down compared to where its sort of baseline is? We don't have history on that. So all these being a factor, dictate the reasons for the decisions I'm making. And like I said, if you just apply this to every single option strategy you do, it's going to be expensive to hold each individual one, and you're going to have theta work against you. So, time and place for everything, right? So, anything else I want to... Okay, yeah, so originally I wanted to do this in one video. This is actually a re-recording because I had some really weird mic issues, so I have to re-record this. This is way too much information to put out in one video, so I'm going to chop this up into slices. So this is more of an overview about what I'm going to cover in the next few videos, and then I'll attack each topic more specifically in each one. So we're going to split it off into 3 main steps. The first one being the entry. So obviously we're entering the trade. Given that we don't know whether or not we're getting a good price to buy at or sell at, we're going to do verticals, which means we're going to buy and sell at the same time. And so that's going to create a neutrality of entry. Now, just because our entry is neutral doesn't mean that we're always going to be neutral through the whole process of it ebbing and flowing. And so the next step would naturally be something happens. And so after that thing that happens, which is one of 3 things, goes up, goes down, just wiggles. We have a game plan of what to do in each situation. Where, in the case that it went up or down, because this is how I set up the trade to benefit from it going either up or down, we'll try to adjust our positions so that we maximize the reward and reduce the risk. So our entry was neutral, but then our adjustment contorts our positions in a way that maximizes for a greater reward or reduction in risk. And then there's kind of the final result in what we've created, which is neutral entry. Coinbase finds itself, or whatever else you're trading. And then how we create a situation where we have a really good risk-reward situation or cost-benefit, or we're in a situation where if things go against us, we don't lose as much, but if they go for us, way more of a gain than a loss. And so that's the game plan. And so in the next one, I'm going to talk about, next video, I'm going to talk about our entry, some concepts, and why I'm doing what I'm doing, and how to just enter neutrally. So I'll see you in the next one.